What specifically have you guys been able to do to execute that other decentralized stablecoins have not been able?
It was probably the proudest moment of the year for us, which was like, it's easy for me to stand on these podcasts and say, this is how it's going to work when things are unwinding, and then everyone's like, sure, we'll actually see how it plays out.
Which of these risks, if you were to say, do you think are the biggest and the ones that you would potentially be most concerned about?
We just see that as such a compelling product that I genuinely believe can touch the hands of 1 billion people. And it's just very simple, a mini banking experience within a single token in your Telegram app, basically. I'm just on the side. I'd like to see them go to zero, selfishly, quicker than most people. Yeah.
GM, one and all, and welcome to another interview here on Coin Bureau. And today we're being joined by Guy Young. He is the CEO and founder of Ethena Labs, which is, of course, the company behind the insanely popular USDe stablecoin. So, Guy, welcome to the Coin Bureau.
Yeah, thanks for having me.
Pleasure having you here. So, Guy, we've got a lot of questions to get through today and lots to discuss, but I think it helps to just give our audience a bit of an overview of yourself. So it'd be good to start with a bit of your background, because I believe, obviously, you were working in TradFi before this. If you can just let us know, a bit of your background in terms of when you got into crypto, how you discovered crypto, and then how it led to you founding Ethena.
Yeah, sure thing. So as you mentioned before, Ethena was working in TradFi at a hedge fund / private equity fund that focused on financial services. So we're investing into banks, specialty finance, usually with some sort of distressed angle, and had been doing that for about 6 years before starting out with Ethena. Had been quite involved in crypto on the side of my day job before sort of jumping in full time. So I had a friend who had actually founded a DeFi app in 2019, and he introduced me to DeFi. When MakerDAO, Synthetics, Lend, which was like Aave back then, was kind of really the only thing that you could actually do on chain. And was just immediately interested by what was going on there, and kind of spent all my time just playing around with DeFi apps when I was supposed to be doing my day job. And it was it took me the whole of last cycle to sort of get the courage, I guess, to quit and start something like Ethena. And I think, as you're alluding to, the real genesis behind the whole idea came from an article that Arthur Hayes put out called Dust on Crust, where he outlined this idea of what he thought was one of the biggest opportunities within crypto, which is to create a synthetic dollar where you sort of create your own form of money that is less reliant on the fiat system. And so, it had been a product that I'd actually been thinking about for a while, because I'd been doing the basic cash and carry that sits behind Ethena through the course of last cycle, and I'd always been thinking it could be quite cool to turn this into a product. And then when I read that piece, it just felt like quite a strong signal that I should jump out and take a stab at it. So that's the real story behind it. And then I guess the sort of high level metrics and sort of timing was that Ethena came out to the market at the beginning of last year. So we launched in about February 2024, and since then have sort of grown from zero to roughly $6 billion of supply in that space of time. And happy to jump into plans for this year and stuff.
It's very interesting. So you were in the trenches while you were still at your TradFi job, whilst had to hide your MetaMask when the boss is walking behind your desk.
Well, fortunately, it was during COVID lockdown. So
couldn't check it out. I was actually listening to a podcast. I think it was the Delphi guys. They said that you were known quite long before that, and you were obviously in the trenches there. I think you were one of the first subscribers to their premium product, and they said that at that stage I knew you were going to be launching something exciting at that time as well. So, did your background at least help to a degree? At least maybe potentially from, obviously you mentioned the cash and carry component of it, which is obviously well known in TradFi, and which is the basis behind Ethena and USDe. But potentially your connections, do you think your background has helped you and helped you grow Ethena to what it has become over the past year?
A little bit, yeah. But I definitely wouldn't over-index on pedigree or that kind of stuff within crypto. I think it's actually one of the cool things about crypto, which is that it's very meritocratic. If you build something that's useful for people, it doesn't really matter what your background is. I think you can succeed regardless. I did think there are bits of what I spend my time looking at in the old job, which is really how does a financial services business actually work, and what sort of drives successful outcomes there, and also learning about what didn't go right in the past. And if we think about it, most DeFi applications, if you look at it through a lens in TradFi, they kind of look like some form of a bank or a trading company that you would have seen in the real world. And so you definitely sort of brought across some learnings there, and there's obviously pieces that are different with crypto. I think the other piece is also like there's an element of like discipline that I think you learn sort of going through investment banking and some of those firms, where I think just like the work ethic and attention to detail and stuff is quite strong. And so I do think actually quite a lot of people who come into crypto from that kind of background without having done something native within the space before struggle quite a lot, because they kind of miss like, how to actually get crypto natives excited about things. And, I think that there is a very special piece to crypto which you can't sort of learn just looking at it from the outside in. You really have to get involved to understand how that does work. So I do feel like having a bit of a mix of doing some of that in my old job was somewhat helpful, but definitely not like a necessary condition. It was actually more important, I think, that I, had been playing around with DeFi and quite involved for many years before I started this to really understand how it worked.
Yeah, culture is very much different. You need to be in the trenches to understand it. So obviously, let's just move on now in terms of obviously the growth of USDe. Like I say, it was one of the biggest success stories of crypto last year. We can run through the stats, of course. The third largest USD asset in the space at 6 billion supply in 10 months. The fastest USD asset in total, the fastest protocol to reach 100 after pump.fun 100 million. So, and of course, it's overtaken DAI, which is crazy. A product that's out for less than 10 months has overtaken the premier decentralized stablecoin. So what specifically now this is in general compared to other decentralized stablecoins as well, but what specifically have you guys been able to do to execute that other decentralized stablecoins have not been able to do, and why it's been such a success for you guys?
Yeah, so just to be clear, like the idea behind Ethena had actually existed with other projects before we came to market. It's just they never got to any sort of scale that people recognized it in the same way. So last cycle, there were actually two projects called Lemma and UXD. One was on Ethereum, one was on Solana. But I think the mistake that they made was just focusing on doing this cash and carry purely on decentralized exchanges. And you're obviously just massively limited by the size that you can do that. So like roughly DEX open interest is, less than a 50th of what you see on centralized exchanges. And so you're just naturally capping out how big that product can get. I think the difference in approach was actually just me challenging assumptions to say, like, is it necessarily the case that users will not use this product if it is only within DeFi? And I think it's actually something that you've seen more broadly this cycle, which is actually there are elements of Ethena which are obviously centralized in terms of how we're touching different centralized exchanges, custodians, that kind of stuff. But I think what I learned was that actually users are fine with that so long as you're actually honest about what you're doing and you're not sort of trying to hide or cover up the fact or pretend that it's more decentralized than it is. I think one thing that we did or had a very strong focus on when we came out was, actually just outlining what the risks are, exactly where the points of centralization sit, and just telling people, like, it is your choice. You're an adult. You can decide whether that makes sense to come in or not. And so when you do that and you do get people's trust to be able to overlook some of those pieces, which obviously aren't as clean as being able to do it just directly on decentralized exchanges, it obviously just unlocks much more scale and being able to get a product that is easier to use and more scalable. And I think that this is something quite consistently we've seen this cycle where I think Hyperliquid is another good example of, functionally it is a centralized exchange as it looks right now. It was like the team running for validators, and people are okay with that. You have some sort of pathway of how you can like get out of where they are right now, and I think that they're down that pathway. But again, it's just another consistent message from the market, which is we prefer products that are actually usable and we can scale and get value out of first before we sort of start to lean too heavily into these other pieces. So I think it was just a difference in approach where I just challenged the assumption of, does all of DeFi need to be perfectly decentralized, or will people accept these trade-offs? I think that was the difference.
Yeah, that's a very good point, because DeFi natives have that ideal that it has to be completely decentralized. Any sort of centralized components, they don't want to use it. And they were at least initially hesitant. I mean, I know when you guys launched, a lot of people were hesitant as to, what you were building. And yeah, it's a good example about Hyperliquid. It's also the scalability component, right? As it relates to decentralization, that whole trilemma thing, and usability and UX is important from the perspective of onboarding users. But obviously mentioned so last year you guys launched and you were put through your challenges. And I think that, especially towards the summer, when, yields, especially when the component of funding rates on ETH started coming down, and that was the trial by fire. So Was that a particularly challenging period for you guys? But it's, it all worked smoothly, but you trusted the process. What did you guys glean from that?
Yeah, I mean, it was probably the proudest moment of the year for us, which was like, it's easy for me to stand on these podcasts and say, this is how it's going to work when things are unwinding, and then everyone's like, sure, we'll actually see how it plays out. And I think it actually gave people a lot more confidence when the market sort of came back at the back end of last year to say like, okay, I've actually seen how this has performed and unwound, more than $1 billion of supply with basically no issues. And I actually view it as a bit of a necessary condition for you to get to the scale which we have as Ethena, which is you need to go through those moments and prove to people that it is reliable before even more money can sort of step in for that next leg of growth. And so really, we're going to go through these periods consistently over the next like 5 to 10 years, which is you'll see these periods of crazy growth, things will level off, you'll see some like supply shrinkage, but you're just hoping that you're making sort of higher lows as you sort of do that through time and building more trust from your users as you do that. So yeah, I think there was nothing to call out in terms of that period. I think it's obviously just not enjoyable to go through because you spend so much time trying to build things up, and then obviously when the market's unwinding, it just feels painful to sort of go through that. But we had no sort of like concerns on our side as it was happening, and I think it gave us a lot more confidence going forward as a product.
Yeah, and in terms of your expectations from last year when you launched, I believe it was in February or
yeah,
it was February, right? Yeah. Did you fast forward into the end of last year in terms of the stats I ran through in terms of your growth overtaking DAI? Did it exceed your expectations in terms of the growth you guys had?
It did, yeah. I did think we would get to the size we are now. I just thought it would take many years rather than one. And I think the piece that I underestimated, which is it was actually just a good learning and life lesson for me in general. You can sit down before and try and estimate how big is like the right tail of outcomes whenever you're trying to do things. And I think this is kind of what investors and builders should always be doing, which is saying like, if I'm right, what is the upside to me being right, and what does the fatness of that tail actually look like? I think where I underestimated things was just how quickly the derivative market within crypto would actually grow. So, when we're designing the product, ETH open interest was like less than 25% of where it's sitting right now. And so you'd look at the product and think, damn, this thing can't really scale like much beyond $2-3 billion, like at the absolute max capacity. And then the market just grows like, 5 times quicker than you ever thought it would. And you're sort of sitting there now, and I'm looking at Ethena saying, well, we've actually kind of like lost market share versus the size of the actual opportunity, where we've kind of gone down as a percentage of derivative open interest. And so I think, again, it was just another lesson to me, which is like, you can think that these outcomes are like large, even in your upside case, but especially in crypto, when you're operating in one of the big markets, which I sort of view as exchanges, layer ones, and stablecoins, you can never really overestimate how big that upside can be if you do sort of find a unique piece of the market to play in.
Yeah. Now, obviously, coming back to the point that you guys were fully transparent and honest about, the risks that come with centralization. And this is part of the point when initially you guys came out and I read through it, and you have like an entire like pages and documentation in terms of where you outline all of the risks that come with the product, the protocol like this, custody, counterparty, basis, liquidity, etc. But just to play devil's advocate, because I think, I know you guys like to do the steel man as well. It's like, which of these risks, if you were to say, do you think are the biggest and the ones that you would potentially be most concerned about?
Yeah, I think the only major way that you lose call it 10-20% of the actual backing for USDe, it's nothing to do with funding rates. Like that one is the one that people speak about the most, but I'm like least concerned about that out of all of them. It's really like custodial risk. So we're leaving the assets with qualified custodians like a Fireblocks, Copper, Cefu, those type of entities. And fundamentally, this kind of exists like with most custodial assets, which is like the same issue we saw with USDC, where the assets were sitting in SVB. If something happens with someone who's holding onto the assets, then that's clearly like a major risk for like the actual principal sitting behind it. Having said that, I do think it's better than leaving the assets on centralized exchanges. So I think like we can all broadly agree that actually custodians are, in the context of everything else within crypto, probably one of the safer places that you can actually hold the assets. So that's really like, if you're talking about a scenario where you lose more than 10% of like the backing of USD, I think it would have to be something that's related to custodians. And, it is a risk and you can't really hide away from it. Like you face the same sort of thing with assets sitting in smart contracts, which is like, if the smart contract gets hacked, then there's going to be an issue. That kind of risk has just been translated into Custodian instead of smart contracts. The other one is one around liquidity and duration. So, you can very easily get out of $1 to $3 billion of perps in a day if people are wanting to redeem from USDe, and you can close that down with almost like no issue. The problem is if you're doing this at 10 or $20 billion of size, you can't really do that in a day without like really distorting the market and causing like large slippage. That's the reason why we have the 7-day lock sitting on SUSDe, which you might have noticed, which is it takes you 7 days to withdraw from the asset. And the real core reason for that is actually one for safety for users, which is over 7 days, you can kind of get out of that size very easily without having any like loss in the backing assets. You just need that time to sort of like match the duration profile of like the backing assets to what are your liabilities, which is essentially like the holders of USD. So that's how we've sort of thought about that risk. Don't want to dismiss it, but that's also not the type of risk where, again, you lose like 10% of the backing. It's like, a few basis points of slippage is kind of the downside there.
Yeah, and then also is the unstaking, right? With unstaking, that will take time as well, right? And if it's done in a rush, you guys obviously that's why it's unstaking in terms of like the ETH yields from like the likes of Lido, staked ETH and stuff like that, right?
Correct. I would just say that there's been a bit of a drift in terms of the product design since when we first came out. So in the beginning, it was like massively heavy on the ETH liquid staking tokens as like the collateral. In the beginning, it was like 90% liquid staking tokens. Now it's like sub 7 or 8%, I think, and we've got it on one of our dashboards. So it really is a very, very small portion of the collateral now, where most of it is just liquid BTC and ETH that you can obviously get out immediately. Yeah.
Got it. And then just come back to you mentioned the custodian risk. I know you use large custodians, but how do you mitigate and how do you mitigate this custodian and counterparty risk more specifically?
Yeah, I think it's just working with very credible custodians that have proper audits. They've properly segmented the actual assets into like bankruptcy remote vehicles outside of the custodian. So like Copper setup, for example, does that, which is quite helpful, where even if there's an issue with Copper at the opco level, you've actually separated like client assets into a different SPV. So I think it's like just working with reputable custodians in that sense. But you can never bring this risk to zero, and this applies to centralized exchanges. It applies to custodians in the real world, banks in the real world. Ultimately, when someone's having the job of looking after assets, there's always that sort of small risk that they don't do that properly.
Yeah. Many people have commented on the actual part of the reasons of Ethena's success is the operational efficiency and how it runs so smoothly. And I mean, you don't have to give away any sort of secret sauce, but like, how do you manage the synchronous, deposits on the one hand, then you're staking and you're opening the longs and the exchange positions as well, like, and not just in terms of like the on-chain components, but then behind the scenes with your own infra setups. Like, how advanced are these systems to be able to like simultaneously open up longs on numerous different local exchanges, managing all those, trades as well as, and then also, liquidating when need be.
Yeah, no, I mean, this is really what we spent like a year building. So if you look at the code that's been pushed on chain, it's like 600 lines of code for the mint and redeem contract. That was like nothing. And it's like 40,000 lines of code for all of the backend infrastructure that's been built behind the scenes. Yeah, I mean, it's hats off, I think, to my team. I think the engineers came from backgrounds at like Wintermeat, Flow Traders, BitMEX was one of the earliest employees at BitMEX with Arthur, is actually joined to be our CTO. And so these are guys who have just built these systems at either market making shops or exchanges before, and could sort of do that in a quick and sort of secure environment with us sort of starting from zero. But yeah, I'd also just say that the trade itself is actually very simple. Like when you have it locked down, you execute on one side like a buy and a sell, and it's quite hard to actually mess that up significantly. The real piece of sort of monitoring is actually ensuring like uptime is actually like close to 100%, because if you ever have issues with people wanting to redeem from the protocol and the backend infrastructure isn't functioning 100% of the time, that's going to be reflected in the peg basically, because people will stop being able to like do the mint and redeem against Ethena. So really it's trying to solve for like safety and resilience rather than anything else. And yeah, I think we actually take quite a bit of comfort with the fact that the assets are sort of mostly held within these custodians, where like the room for error is actually very difficult to sort of screw that up, because the custodians are looking after the assets, which I think sort of take out some of those points of failure. Yeah.
Cool, man. Just moving on a little bit, in terms of last year, you had an interesting thesis around, you termed Ethena, and basically around where Ethena would lead to an compression of yields between the DeFi protocols. And I think that it has happened, especially over the past month, I think, in the terms that obviously USDe yields have been falling, while yields on the likes of stablecoin pairs on lending rates on Aave have been climbing. So basically, how do you think your thesis has played out? And then what do you think now happens that the yield differential is kind of compressed?
Yeah, so I think just to explain to your listeners what's going on there, people are taking USDe, which is like importing like C5 rates, and then generally those rates tend to be much higher than the borrow rates that you see within DeFi. So normally in most scenarios, you're seeing like whatever USD at 15-20%, and borrow rates in Aave are like 10-ish. There's obviously just a very interesting trade there where you're putting down the collateral, borrowing more dollars, and then looping that up to get an interesting post-leverage return. And we saw that at like pretty crazy scale when we first launched with Aave, where it grew from zero to just under $1.5 billion in like 3 weeks, with people executing the same sort of trade. The interesting thing about it is that the compression of the rates is kind of like what actually needs to happen in an end state when this is fully scaled. Like that's actually the thesis, which is these interest rates should not be too different from one another in terms of the cost of capital within CeFi and where you can borrow in DeFi. It's just Ethena's like making that process much more efficient and actually like forcibly tying these two things together. So in an end state, like we've been quite slow and controlled when it comes to the rollout of this product on Aave to just make sure it doesn't grow too quickly as we sort of see the second order impacts for the rest of DeFi as it does. But it's sitting at 1 billion now. I think that market should be closer to like 5 in like 3 to 6 months. And at that scale, it should be operating so efficiently that like whenever there is a small difference in the rates you see in CeFi and DeFi, almost infinite amount of money can sort of come in there to do that loop and sort of close it down. And really, Ethena is just providing that like connective tissue to allow it to happen. So it's not something we're concerned about with that rate coming down. I actually view like the falling of Ethena's rate is actually a signal that we're doing our job right. So part of the thesis for Ethena is you've identified that people are earning too much for cash and carry within CeFi. That number should never be 30 or 50 or 60% ever. Like it makes no sense in terms of the return. And if Ethena does its job properly, that rate should never really go beyond like 12 to 15. And if you find the right rails for capital to be able to flow in, you're just giving them the infrastructure to allow capital to flow in and sort of compress that rate.
Yeah, democratizing the CeFi cash and carry, or the CeFi cash and carry trade is very interesting. And of course, but obviously now to come back to the Aave integration, because I remember initially when you guys, there was a bit of a kerfuffle earlier in when you guys first launched, but when you're trying to come to Aave, when there was many that took issue with, it's interesting that you guys because initially they were hesitant, and many people within the DeFi ecosystem were hesitant with the inclusion and integration with Aave, and then obviously you guys did it last year. So do you think what made them change their mind? Do you think it was just being put to your paces in the summer? Or?
Yeah, I think that's exactly right. So it was actually because MakerDAO were kind of the first one to take a big risk on Ethena in the beginning. They committed like 600 to 800 mil of DAI backing to kind of do the same leverage trade on Morpho. And the Aave team took like issue with that, just with the speed and size that Maker was moving. In retrospect, it was the right decision for Maker to make. Like we accounted for roughly 25 to 30% of the revenues of the whole of Maker with just that one decision that they made at that moment in time. And obviously nothing's gone wrong since then. So I think we can look back with the benefit of hindsight and say that was probably the right sort of risk-adjusted decision for Maker to make. Having said that, I don't have any issues with Aave taking the stance of just saying we want to see how this thing works in the wild a bit longer before we start scaling it up to multi-billions and sort of exposing Aave to Ethena. And so, I think it was just working with the team for many months during the summer, them seeing how we unwound, sort of grow again. And then, all of these things are in the end. I think one of the issues that we've seen as DeFi in the last 2 or 3 years, and I'm interested in your view on this as well, is kind of we did struggle to find like net new innovation that I think brought like material amounts of new capital into the system to do things other than just like putting ETH in a different box, right? Like I can't really think about what else we've sort of done within DeFi other than, just like staking, restaking, and then leveraging your ETH on these money markets. There hasn't been a fundamentally 0 to 1 sort of moment. And I think what Ethena brought was actually just a new stream of like real cash flow to the system that people could build new and innovating things like on top of. So whether it's Pendle with the fixed rate stuff, whether it's the things you've seen with Aave and Morpho, it was just fundamentally bringing in a new stream of like capital and cash flow, which allowed like other projects to do more around that.
Yeah, I do tend to agree with you. If you think back to the 2020 DeFi summer with all the food wars and all that, I think it was just like this rehypothecation of yield and repackaging it and just leveraging it up. And exactly, we're just like you wouldn't be able to get additional yields without taking significant risk with the rehypothecation, right? And just restaking and restaking and restaking upon restaking. So obviously finding alternative sources of yield from, as you guys are doing, from CeFi and from TradFi. And with USDTB, which we'll talk about in a bit. So yeah, it's definitely an innovation which has helped DeFi expand. But now, obviously, USDe is this, it generates yield it generates yield, but it's also been utilized as a stablecoin in itself in terms of liquidity on exchanges and protocols. For instance, I know that it started with Wintermute, which utilized it for OTC trades, and now you've integrated within Bybit and Deribit, and it's used as a pairs trading for futures trading, right? And liquidity on that. So my question is, are there first of all, are there any other exchanges or partners on the horizon for these integrations and implementations?
Yeah, so currently we are on 60% of the centralized exchange market. So the two big ones that we haven't integrated with are Binance and OKX. And CeFi is just a very difficult beast to tackle. Like the way that these exchanges operate is typically they try to do things in-house, or at least see things like operate for multi-years before things get integrated. If you think back in the history of DeFi, I really can't think of many products at all that have actually made the jump from starting on chain as a DeFi product and eventually ending up as something that is unique and differentiated within CeFi. I do think USDe is one of the first that's actually made that jump. So as you said, the launch that we had in Bybit was successful from our view. So we flipped USDC there in just a few weeks in terms of total balances sitting on Bybit, and that's obviously the second largest exchange now in terms of derivative market share in the whole world. And the one piece I'm quite excited about is that it becomes exponentially more useful the more venues that come online, because it's actually not that useful to have USDe just sitting on Bybit where you're restricted and not able to send your collateral to an OKX or Binance afterwards because you have to swap out and then get something else and then swap in. And that friction is actually huge, especially for like market makers, high frequency trading firms and that kind of stuff, where just that small piece of friction to get in and out of exchanges where you need to be always moving collateral in an efficient way isn't actually kind of worth the yield that you're getting for USDe. So it's actually like the more venues you add, it like really multiplies how much more attractive it becomes to other people, where it can just become like the default asset for you to be using across all of these venues if we do get integrated across all of them. And really, I see it as just such a huge opportunity. I don't think people understand that there's north of like $40 billion of Tether demand, which is used exclusively to margin perpetuals on exchanges. And, for a lot of retail users and then also professional funds, you want to get paid zero on your collateral when you're trading a perp that's costing you 10% on the other side, or do you want to offset that with your collateral? And it's a pretty easy decision for most people to make there. So I really think that is a huge use case for us. And it's always been the success stories of stablecoins, which is like centralized exchange distribution is sort of the key to the whole thing.
Yeah, no doubt. And probably also, the fragmentation in terms of different exchanges from personal experience. I know it's obviously much bigger for market makers and everything, but fees as well. Because if you have USDT on Binance and you want to get out and you can't just directly buy USD, you have to first convert and then do the swap on chain. Obviously, yeah, so in terms of as a stablecoin for collateral and exchanges, that's a massive market. But I'm curious then in terms of also broader, like what about payments? Are you guys looking at that front as well? Because that's another big use case, massive use case for stablecoins is payments, right?
Yeah, 100%. So I put out this roadmap piece. I don't know if we can maybe link it in the show notes.
I'll link it for sure, yeah.
Yeah, maybe a week or two ago, and I sort of spoke about the different use cases for stables and why we saw a particularly interesting opportunity going to Telegram with USDe. So I think just to open up this piece of the conversation, I think when you're a startup, you need to be extremely honest with yourself about like what is it that you can actually compete on and where are you worse than the existing incumbents? Because a lot of startups make the mistake of sort of coming to the market and then going, I want to be the next Tether, which is obviously just ridiculous because you haven't actually looked at the market's like microstructure of the market to understand why it is that they are winners and why you have like a less than 1% chance of winning. The reason I'm giving this whole context is because, PayPal's trying to do stuff in payments. You're going to have Revolut come in very shortly. You're going to have Visa, MasterCard will do something in the next couple of years. And the question is, why us as like a shitty startup that's just come to market in the last 2 years, or whoever's going to come try to do the same thing? Why would you be able to compete with them on their own turf in terms of payments, where these are multi-$100 billion companies that have existed for decades? And so our view was like, we don't want to be competing with them on their own turf to do this type of product. We want to actually look at like interesting distribution platforms which had like crypto native elements to it, where you could actually enable payments as like a unique feature in what they're doing. And so what we're building with Telegram is, close to a billion users are sitting on there. And you have the custodial wallet where you can hold Tether and Ton at the moment. We're going to be having USDe sitting alongside that as like the savings asset sitting within your Telegram wallet, where you can sort of send to your friends using their Telegram handle instead of wallets. Save with USDe as sort of your mini, savings tool, just with the token itself. And then have that integrated with payments where you can sort of pay with your phone, double click on Apple Pay to take money out of that savings asset to be able to pay on the other side. So if you really think about what that value proposition is, that's kind of 95% of the, what do normal individuals want out of the financial system in their lifetime? Like holding $1 in your bank account and getting a yield and spending it covers like 95% of what you want to do with finance as a normal individual. And then maybe a mortgage is like the other piece. And so we just see that as such a compelling like product that I genuinely believe can touch the hands of like a billion people. And it's just very simple, a mini banking experience within a single token in your Telegram app, basically. Yeah.
Fascinating, man. And is this going to be issued on the Ton, or you're going to like mint USD on Ton, right?
Yeah, exactly.
Right.
Yeah.
Cool. Fascinating. Okay, well, obviously, you've got to love. Coming back to you've mentioned them, obviously, the competition, which is massive, and it's a good point you make about focusing on what you can, which you have a competitive advantage as a startup, and not trying to overtake the competition. But you do have big competition in terms of traditional stablecoins, right? USDT and USDC. So obviously, you've outlined one part of the strategy is focusing on these particular crypto native places that you can get the competitive advantage, but how do you see yourself competing with him in the long term in general? Other thoughts in terms of how you can carve your competitive advantage among these stable coins?
Yeah, I think they are fundamentally different products, right? Because the risk profile of a USDC and Athena's product is so different. So I think there's some overlap, but then also in some senses, we don't really serve the same purposes as they do with the same sort of like backing and risk profile and all that kind of stuff. Having said that, if we think about what are the three axes that you can actually try and differentiate with this product, you're trying to produce something that's stable and pegged to $1, so you can't do that better than anyone else. It's like you either screw up and no one will use your product again, or you're just the same as everyone else. So it's hard to sort of like innovate and compete on that axis. The other one is liquidity, which is, as a startup or like a new product in the market, you're never going to be as liquid as a USDC or USDT, which is trading hundreds of billions of dollars a day and has all of the main pairs in Binance sitting and denominated in those pairs. And then the final one is return, which is kind of like the insight that Ethena had, which was, okay, well, Tether and Circle aren't paying yields, but also the yield within Ethena is so unique and different to like a treasury yield that, you've seen 100 different RWA startups and stuff come and say like, we'll pay the yield and that's how we're going to flip Tether. Well, that hasn't happened. And actually like we've identified like a unique source of alpha and yield in the backing for what we're doing that is actually differentiated to those RWA competitors as well. And so that was really the angle that we wanted to lean into, which is saying we can do that actually 10 times better than Tether, even though we're losing on those other pieces. And then you have to identify where in the market do people care about that more. So it's like collateral within DeFi, collateral as trading within CeFi, those different pieces. And really like the trading use case of like actually sitting in an order book that people are trading in and out of BTC will always struggle to compete with those two. And that's not something that we're sort of pushing to try and do. We're just trying to find those more narrow use cases where we feel we can be 10x better than what they're doing at the moment. Yeah.
And just taking a step back in terms of the broader macro perspective on regulatory landscape, right? Because that obviously shapes a lot of this. I'm curious to get your thoughts on a few things around the stablecoin market. More specifically, let's start with obviously what's happened in Europe, right? So about a few days, like 11 days ago, 1st to 31st December, you had the implementation of MiCA, or the fact that people had to delist accredited stablecoins in Europe. So I'm curious, what sort of impact do you think this could have on the stablecoin market in general? and is it a big thing, or or is it something how are you guys like shaping your direction in this regulatory environment?
Yeah, so we are doing the work to also apply for to fall under the MiCA framework. So it looks a little bit different. So they have these two different carve-outs. You have one called asset reference tokens, which look very different to the e-money license, which is what Circle has been given over there. And I think the good piece is that they have actually given some sort of framework that you can actually work within, which is more helpful than the US in the last few years, where you haven't actually been given any guidance whatsoever. And so people just choose to do nothing out of fear of sort of not breaking a rule they don't know exists, basically. And so, yeah, I think within Europe, there are pieces around the edges where I think some people disagree with the way it's been implemented. Tether, for example, has not engaged that much with like their core product in terms of adhering to what they've outlined. And so I do think it's interesting because clearly like Circle is going to be able to take more dominance and share with, European specific entities. It's just that those as a percentage of like global trading activity within crypto is not that large, like versus Asia or the US. So I think it's good. You've got like, you're progressively getting towards something where you've got clearly defined rules and people are just given time to sort of fit within them. And I think that it is helpful to at least have that outlined. So we're doing the work on our side. Nothing's been confirmed yet in terms of actually getting that officially done. But we're hopeful we'll have that, positive news on that in the next sort of 3 to 6 months.
Okay, that's timeline, 3 to 6 months.
Yeah.
Okay. And then more broad, coming over to the US then, right? Because obviously everyone's very, very hyped around what the Trump administration could mean for, especially a new SEC head and a pro-crypto SEC. And a lot of the bullishness has been around what it could mean for DeFi. I mean, one of Trump's sons has actually legit just launched a DeFi project, which you guys have actually collaborated with, right? The World Liberty, right? So I'm curious then in terms of like, what is your outlook for the regulatory landscape for the US when we have the new Trump admin, specifically as it relates to DeFi and stablecoin regulations?
Yeah, I think there's clearly been a lot of optimism that's been baked into the market, right? And I think, as you're pointing out, DeFi tokens themselves, even like the prices that have reflected, I think a lot of optimism in terms of things getting a bit more favorable within the US. I think the issue, though, is that we've actually seen nothing that's actually tangible. And he's obviously needs some time from when he comes in to deliver something that's tangible that we can actually get our arms around. I think, though, all of the signaling could not be more positive. I think it's one of the most insane things that, the president and people close to him and his family are actually there rolling up their sleeves and getting involved with DeFi in a sense that they're actually building something, which is just, if you told me that 2 years ago, like literally would not believe that at all. So I think directionally, clearly, like the signals are super strong. It's just we don't. We're not going to like be jumping the gun in terms of like us as Ethena opening up to the US or retail users there until I think we see a bit more like crystallized. This is what's actually changing, and we're sort of happy to wait until that does come.
You bullish World Liberty Financial then?
I am, yeah, and yeah. I mean, it's also the core use case that they're using from Aave, I think is one of the genuine use cases for DeFi that I find useful myself, like almost every day. So I am, yeah.
Yeah. DeFi will fly in 2025, hopefully. So obviously USDe is one of the main products, the main product, obviously, from Ethena. But obviously, you guys have got the second token, the governance token, ENA, which it has also been crushing recently. I think over the past 2 months or so. I think at this stage, correct me if I'm wrong, it's still very much a governance token. So I'm curious, is that still the case? And then how do you see these use cases evolving through time?
Yeah, so it's not the governance token piece. There has been like some development there with discussions on the governance forum around like a fee switch a couple of months ago. So Wintermead made a proposal just around the time of the election, actually, to start to redirect some of the cash flow that's sort of been generated within the product to potentially come into the ENA token itself. That's not been 100% finalized now, but it's sort of been pushed through and it will be implemented according to the forums within sort of like the next sort of 6 to 8 weeks. So there is some progress there where there's just a very clear tie between the growth of the product and sort of the token itself. I think the other piece that we've made quite a bit of effort to take some learnings, I think, from other things that my perception of what I think has been done well, which is BNB. So BNB's obviously got this really interesting model of having airdrops coming down on it from all of the launch pools and stuff like that, which you can kind of think about as like an ongoing yield to BNB holders with other people's tokens. And it's a really powerful thing because the more and more people want to list and trade and build on Binance, the more and more that becomes attractive to the BNB token. So we have this whole sort of like ecosystem of apps that are building on USDe, and it's more sort of like you can think about it as like Ethena turning into more of a platform that people can actually build on USDe as like a core primitive, which unlocks all of those different pieces that we're discussing at the beginning of the episode around, fixed to floating rate swaps, like securitization around the thing, levered money markets, which again are like fixed and floating rate, all of these different like financial primitives that we think are like uniquely enabled by SUSDE. We're going to have like different projects that are building on Ethena and then airdropping their token to ENA holders. So we had two which have been announced like recently. There's one called Ethereal, which is you can kind of think about it as a perp and spot exchange that's being built with USDe as like the core asset within the order books. And then Athena's providing liquidity in terms of the hedging flows onto the exchange itself to help bootstrap it. So that I'm pretty excited about because exchanges can be huge if they're done well. And obviously when you have the liquidity support from Ethena, it can become pretty big quite quickly. And so, yeah, like 15% of their token supply is being airdropped onto ENA holders. And we have something similar with Derive, which is one of the largest on-chain structured products protocols, which again is airdropping 5% of their supply on ENA holders next week. So we have got this sort of like little flywheel of like different pieces within the ecosystem dropping tokens onto ENA, in addition to that potential fee switch that I described at the beginning. Yeah.
Speaking of airdrops, then I'm curious because you guys obviously started off the year in February with quite a sizable airdrop of the ENA token, and it went quite well. I mean, in terms of like based on the feedback most other projects have got last year in terms of their airdrops, which we can't say that much for sure. So I'm curious to get your take then from someone who has completed an airdrop. Why do you think yours went so well? What do you have in terms of advice for other projects at all, considering a launch of their tokens through some sort of an airdrop mechanism?
Yeah, the bad news is I don't think there's like a one size fit all for these type of things. This might sound like I'm just dodging your question, but I think the one learning I have is that you need to just focus on your product, and if you build a good product, all of these things kind of fall into place in the end. I think again we spoke about Hyperliquid at the beginning of this episode. I won't sort of reference us as Ethena, but like them, a good example here of, good product, sort of the business of an exchange makes sense, and the way they sort of executed things, I think went well. And then all of those kind of things fall into place at the end. I think the real disasters you see on airdrops mostly are where people don't really have a product and they're not confident in like the core product market fit of what they're doing. And then you're trying to sort of play these games of either, withholding too much from the community or like trying to overcompensate for it or whatever it is. And really, I think always it comes back to, is your product, can it stand on its own 2 feet, and do people actually want to use it beyond that airdrop period? So, I think generally you've also just got to try and be like very clear and honest with people up front. If anyone can sniff that you're trying to do anything shady around, I don't know, dropping to your own wallets or doing, preferentially treating some group of people over the other, it just raises like red flags immediately, and you just never want to have that mistrust with like a team within crypto. And so that's one thing that we're quite focused on, which was, our points program was actually the shortest in crypto history. It was 6 weeks long, and we dropped like roughly 700 million-ish of ENA on the community after 6 weeks. And it was something that we literally, when we came out with the first blog post, we said, this is going to be extremely short. We're planning on ending it here, and this is how we're going to carry it out. And half the people didn't believe us because we were just giving timelines where, most of these points programs like run for 3 years or whatever it is. And a bunch of people messaged me afterwards going like, I just didn't even believe like what you're putting down. And I think there's actually a huge amount of goodwill that you build up with people, which is actually just like set deadlines, keep to your word, and actually do what you've told the community that you're going to do. And I think because so few teams do that, it does sort of like elevate you when you do.
Yeah. So key points around having transparency and expectations meeting, exceeding expectations in terms of delivery. Because a lot of these airdrops from last year, people basically like, they extended it out and people had such high expectations for what they were going to get. And obviously, then in the moment they dump it because they don't feel a kinship with the project. They weren't there using the product. They used the product mainly just to farm mercenary, Sybil attack the thing and get as many points as they can. So I think that's it. I think, and especially Hyperliquid, the good point about it, it's like build a product that people want to use and ancillary to the token drops. And, that's what I think you guys did well there. So just taking a zooming out again in terms of like the global macro backdrop, because you've mentioned that macro tailwinds, like the rate cuts we've seen, could be a key growth driver for USD. Although, I mean, I'm sure you've seen now more in terms of, there's now concerns about, is the Fed even going to cut again this year? And, the 10 years rallying, and, global rates are starting to rise, at least in the West. Yeah. So I'm curious in terms of like, how do you see things playing out in terms, because obviously interest rates and the TradFi interest rates are, as you say, they're a tailwind for, USDE and its growth. And also your goal of like marrying the two, providing that connecting fiber between them. So I'm curious to see, first of all, like what your perspective and your projections are for the macro environment over the next year, and then how does it play into your strategy at Ethena?
I'm not a macroeconomist. I don't have any more insight other than just saying like the rate curve is most probably right at any given moment in time. I think directionally though, we obviously started to see rate cuts come down in Q4 of last year, and it's a question now of like speed. I think for most people, which is like, are they going to cut as quickly as we expected before? I think the good thing is that directionally it's going in the right way for us, which is as those base rates start to fall in the real world, you tend to see speculation within crypto pick up in the opposite direction. Demand for leverage picks up, and rates within crypto go up. So really for us, it's almost like a compounding effect when you do see that take place, because it also lowers like your hurdle rate that you're trying to clear, right? Because when your RWAs are at 5%, it's actually a pretty hard hurdle to try and clear relative to the last 20 years of risk-free rates. But when that number is closer to zero, I think just the demand to come into a product like Ethena is that much higher. So for us, I think don't have any like particularly unique views on where that goes, but I would say just directionally it's sort of trending in the right way. And Athena's done reasonably well despite interest rates being at 5%. So if they're going to be hanging around higher for longer, it's not like existential to what we're doing. I'm just on the side. I'd like to see them go to zero selfishly quicker than most people.
Yeah, the series of ZERP. Yeah, I guess. Well, this comes back to obviously you're trying to get yield from other places in TradFi, and it's obviously you guys launched USDTB last year, right? So that's based tokenized BlackRock's Biddle Fund, and so how's that been going? How's that launch been going? And how's it looking there?
Yeah, it's all right. So it's only been around now, I think, for 3-4 weeks. Really, like what we're trying to achieve with that is like exchange trading collateral, where the design of the product is we try and align exchanges to be more incentivized to push that product over normal fiat stablecoins. It's definitely like not the core product of Ethena. It's sitting like adjacent to USDE, but I think also plays a nice role for USDE, which is if you ever get into those negative funding scenarios that I was describing in the beginning, you can actually always just close the positions and then we come into our own product. We also have like a couple of integrations that are coming up with other big DeFi apps, and this has been a big theme that you've seen this year, which is Ethena now has kind of the two products that you could potentially back a stablecoin with. You've got USDE for like the perp exposure, and then you've got USDTB, which is backed by normal T-bills. And if you think about every other stablecoin that sits on chain, it's always just some blend of those two things kind of like mashed together now. And it's kind of just Frax is backing themselves with USDE plus T-bills. Usual, which has had a reasonable amount of growth in the last few months. Again, started with T-bills, now they're opening up to do T-bills and USD. And to the extent that, Ethena can just say, okay, whatever mix you want, you can just pick and choose between our two products. It sort of helps us to be like back-end infrastructure for all of those pieces there. I think the more interesting one for us, though, is that, what is the role that Ethena is playing for like a BlackRock there with that product? It's taking a TradFi asset and then trying to distribute it ourselves into crypto for a TradFi asset manager. The more interesting opportunity for us is, can we take a crypto native asset in USDE, wrap it up in a compliant, institutionally friendly wrapper, which can actually be pushed out into TradFi, and can they do that sort of job in reverse for us? And so it's like a very nice symbiotic relationship here, where we're sort of like working to play the same role but in different directions with those partners. And so really that's kind of like the core focus for me in the next year, which is I think that there's a $10 billion plus opportunity of taking USDE into TradFi asset managers. And that's sort of where the core focus sits, which is executing on that in the next few months. Yeah,
and that's IUSD, right? That's what you guys are working on this year.
Yeah.
Can you explain exactly technically what you're doing and who you focus and what kind of partners you're working with on that?
Yeah, it's actually extremely simple at like the token level. All that's happening is like SUSD is being wrapped in one more token, which has a few transfer restrictions sitting on the top. So if you look at like the BIDL token contract, it just doesn't allow you to send it to like any address. For example, it's permissioned, and you have to follow a certain set of like permissioned addresses that can actually send and receive. That's all that's being put on top of SUSDe. And we're going to be working with those type of partners. We haven't like fully announced who they're going to be. That's sort of coming in the next couple of weeks, who are going to sit there as sort of investment managers, just looking after the process of basically taking in fiat or taking in USDC, and then subscribing to Ethena on the side and wrapping it in that token contract that I described to issue it to asset managers.
Right. And USDTB, how's it going so far? Like, how's the growth been so far in the past 3 weeks? Like,
yeah, it's roughly at like 70 mil now. It hasn't been integrated on any of the sectors yet, and we've got that usual announcement that came out. So we're going to be the largest backing behind usual now, which is at roughly 1.5 billion at the moment. So I think there's roughly $1 billion that's going to come into USDTB in the next sort of 2 to 3 weeks from usual. There's also MakerDAO's Grand Prix application. I don't know if you've seen, for their RWA stuff, which again, we're expecting a reasonable chunk of that is coming in there. So once the exchange connections start to come online and that kind of stuff, I'd be surprised if USDTB isn't sort of 1.5 to 2 bill in the next couple of months. Yeah.
Got it. I mean, obviously now we're talking obviously about RWAs. I'm just curious to get your thoughts on this, because obviously it's another niche that everyone's excited about. And what we've been talking about specifically is of tokenized securities, right? So I'm curious in terms of just more broadly, do you think there's a larger opportunity for tokenization of a lot of different other assets, or do you think it will be focused more specifically on treasuries or yield generating assets, and that TradFi has a lot of liquidity for? Because I kind of think it's the latter, but I'm curious to get your thoughts on it.
Yeah, I think treasuries will definitely dominate. And that's because you can put them in a very useful format, which is stablecoins and like stablecoin adjacent products. And so when you can actually, I think a lot of these things aren't actually useful if you're just holding it on chain. You know, having a treasury that's sitting there on chain where you're just trying to get a few foundations to put in a few $1 million, like that isn't that exciting to me. I think the real piece that's more interesting is when you start to use this as collateral sitting in the back of other stablecoins, or as collateral on derivative exchanges where you can trade and collect like the treasury yield while you trade. All those different things for like improving capital efficiency, I think are interesting, and treasuries are I think going to play the largest role out of all of those assets. I did see some piece actually last week, I don't know if you saw the same, with Coinbase potentially exploring putting like a tokenized version of like the equity of Coinbase on Base.
Yeah.
And I don't know, these type of things I think start to get very interesting when you start to think about the powerful pieces that DeFi can bring along in terms of composability and being able to stack together different assets. We've never really seen that in the context of equities ever. And actually the derivative instruments that we built within crypto, I think it's actually one of the few things that we do better than TradFi. Like the perp, for example, is one of the best financial innovations, I think, like ever, not just crypto, like just in like finance. And it doesn't really exist at any scale in like normal finance. So one thing I really hope that someone can sort of unlock in the next few years, and hopefully that comes with like a bit more of a supportive regulatory environment, is can you get equities onto derivative exchanges? It's probably going to be in a much more permissioned way than sitting on DEXs, but starting to get like Delta One products or derivatives on equities, I think would be like very interesting. And I actually think it makes more sense than options for like equities. You know, all these people punting 0-day options on Robinhood and that kind of stuff.
Yes.
What they're trying to do, they're trying to get leverage, but like you're getting leverage with the complication of all of the other Greeks that come along with options, while a PEP is just like, I want my leverage and it's just directional, done. So yeah.
Yeah, it's a very good point. If I recall, there isn't actually, at least in the US, there is no way for retail to take leverage bets on stocks, single stocks, apart from options. Maybe a little bit of like margin trade. In the EU, there used to be his CFDs and these other kind of spread betting, but these were very isolated. And yeah, if you can create a massive market for perps on stocks, as efficient as they managed on exchanges, that's a massive opportunity for sure. Just running off, I think, can you just run obviously you've got the roadmap and you've talked about some of these products already, but is there anything else you guys are particularly excited about in the next few months, or even indeed the next year, that you think our audience should know about?
Yeah, I think, the piece that we're touching on with like the IUSD piece and basically just exporting the products in TradFi, I think that in the Telegram payments piece is just, we view as such huge opportunities that like everything else is just not as big as and as exciting. And I think the cool thing is that I think finally TradFi is sort of looking for something to do after the ETFs, right? Like they were extremely successful in both of the launches, and I think a lot of individuals on that side are looking at the market now and saying, what actually comes next and what can we do next that actually moves the needle. And we're biased on our side, but I think that this is one of the very few products that can actually be large enough to interest them and unique enough in terms of like its properties to get like real capital to flow into the system. So that's probably the most exciting piece for me.
The final question, Guy. Your username Leptokotic. Is that a remnant of your TradFi days? Obviously people would understand the concept of like normal distributions and kurtosis. I'm sure they understand, but is that a reference to anything in particular apart from that?
Yeah, it was actually kind of on that theme that I was discussing in the beginning of the chat, which is like it's like the idea of fat tails, where I think generally tails are fatter than people assume on the downside and the upside.
Yeah,
and that tends to be where all the magic happens most of the time. So I think generally, if you're hanging around in fat tails, it's a more exciting place to be, especially within crypto. So yeah, that's
damn straight, man.
I kind of regret making the name it so long and complicated.
No, man, you made it your own, man. That's great, and it's got a thesis behind it, right? Which has informed your decisions and you found Ethena. So yeah, guys, in terms of like finally, where else can our audience follow you guys? I mean, obviously, I can link to Ethena below. I mean, your Telegram and your Twitter as well. Is there any other places they can follow what's going on in Ethena?
Yeah, so the Ethena Labs, Ethena_Labs, Twitter has like everything there. We've also got links to like the mirror pages where we do a lot of the blog posting from Ethena itself, and then also on my one, which has like the roadmaps and stuff. So yeah, I think the Ethena Labs Twitter itself, definitely the best one-stop place to get all of it. So yeah.
Well, thanks a lot, Guy, for coming on. This has been really fascinating conversation. Like I say, you guys have been the most successful protocol, or indeed crypto project in general over last year. I'm very excited for you guys' growth, and thanks again for coming on, man.
Yeah, I appreciate it. Thanks so much.